Good afternoon, everyone. Thank you for sticking around till the end of the afternoon schedule. I live in London. When I put this in my calendar for December, I wasn't sure if I would be talking to all of you as a fellow citizen of the European Union, so it's quite a pleasant surprise to be doing so, maybe not for much longer. And it's also a pleasure to be talking to you today about my business Azimo, which is a big Polish fintech success story. Azimo, for those of you who may not be familiar with it, is a digital money transfer service. And this slide here is a way of thinking about the cross-border payments sector. Along the bottom, you have some of the major incumbents in the sector, divided up simply into banks, FX specialists, or where we play remittance. And then along the top, you have the digital disruptors and challengers divided up in the same way. And there are not that many businesses in our particular space doing cross-border money transfers as a pure play digital business. And some of the companies we're trying to disrupt are very, very deep-rooted. So probably the best-known company in this sector is Western Union, which is 150 years old. And so if you think about incumbency advantages and brand advantages, that's a very significant one. But remittance is a terrific business, not widely known. $700 billion of annual global flows that are sent home by people around the world. And over the last 20 years, it's grown at a CAGR of about 9%. There are not that many sectors that can say the same thing. And Europe is a very big piece of that business. About $150, $160 billion is sent from Europe to the rest of the world every year. But it's a very badly served sector. So most of the incumbents that we were talking about on the previous page will charge for a median transfer of a couple of €100 or a couple of $100 when it goes from the US, will charge 5, 6, even 7% of the volume. And this is being charged to some of the most hard-working people in Europe, migrants who've left their homes to work hard and support their families. We regard that kind of margin as being tantamount to theft from those hard-working people. And so one of the ways in which we and other digital disruptors are disrupting this market is on price. We have a massively simpler distribution model without large numbers of the agents and intermediaries that you classically find with established businesses like Western Union and MoneyGram. We also we're a pure play digital business, so we have no offices, no branches, we have no cash that comes into us, and 90% of our transfers are made from a mobile phone. And so our pricing can be radically lower. So typically, depending on the corridor that people are sending money, somewhere between 1% and 3%. And so there's a very, very significant incentive for customers to switch over to digital providers. This is why you see such a lot of switching happening at the moment in this sector. We're based in Europe, so half of our management team is based in London and half in Krakow, and about 80% of our team is based in Poland. And this is a European business that has been built out of Poland over the last 7 years or so. We send money from 25 countries across Europe, and we operate in 7 currencies that people send, and we localize our service into 9 different languages. And you can send it more or less anywhere in the world. 90% of all of our transfers happen on a phone, trending towards 100%. Europe is a great place to cut your teeth as a payments business. It's multi-currency, multi-country, of course, multi-culture, quite sophisticated regulators. If you can make it here, you can make it arguably in almost any other region in the world. And next week, we'll open our first sending market outside Europe in Hong Kong. And in 2020, we expect to follow that with Canada and Australia. So we'll go from being a European fintech business to a global fintech business. And then on the other end, we send to almost everywhere in the world. We have very significant receiving markets, as we call them, in places like Nigeria, Colombia, the Philippines. And one thing that might surprise you about this business is that more than 80% of all of our transfers arrive in less than an hour. And this is including into countries where you might not think of the local banking systems as necessarily hugely developed. But as a fintech, you can pick local partners who allow you to deliver very, very quickly as well as cheaply. And if the first phase of disruption of this industry has been based on price, we think the second wave of disruption is going to be based on speed, and that customers are getting very used to the idea that they can send money home while they're on a WhatsApp chat with their uncle or their kids, and the money can be there before they've finished having the conversation. They can confirm that it's in the account or been picked up while they're still talking to their family member. And we think this is going to become a normal customer expectation. And then Poland is a very significant market for us as well. About a sixth of all of our volume is sent from Europe into Poland by the very hardworking Polish diaspora, particularly from the UK. And happily, so far, despite Brexit, not that many Poles seem to have left the UK, being very patient with the slightly unsupportive government that we've had in the last few years. To be a fintech operating in this space, you need to have great tech, and we're fortunate that we've built a great, flexible, scalable platform over the last 5 or 6 years. This is a slide that our investors love because it allows them to pretend that they have deeply diligenced us by looking at one slide summarizing our entire tech stack. But to convey what it means for us, we've built a platform that allows us to automate lots of the things that can be very burdensome and difficult for traditional payment and money transfer businesses. Things like KYC and compliance, FX trading, matching and reconciling millions of transactions between hundreds of thousands of senders, dozens of partners, millions of recipients, managing working capital and treasury that goes along with that. These are things where in a traditional business you need hundreds and hundreds of people to support. Our platform has enabled us to avoid that and has allowed us to scale efficiently and profitably. And customers experience our technology as two very popular apps on Android and iOS. They love the experience. We have great ratings. For those of you who like Trustpilot, which is becoming a sort of de facto satisfaction mark, we do really well there. For those of you who prefer NPS, the good experience seems to lend itself to a very strong NPS score of about 70. So our customers say that they will recommend us to their friends, and in fact lots of them do. About a third of all of our new customers come in through a personal recommendation. And that means that we can bring in new customers quite cheaply. So our marketing costs and our LTV CAC ratio have been getting better and better. For any VCs in the audience, our LTV CAC is above 6, and that's allowed us to scale in an efficient way and in fact reach profitability in Q2 this year. There are not that many profitable fintech businesses 6 or 7 years in. The two words are not often uttered in the same sentence. So far we've served more than 1 million senders and approaching 3 million people who've received transfers using Azimo. And then in pure financial terms, our financial year runs to June. Last year we grew our top line by about 60% year over year. And we're approaching a revenue run rate of about $30 million. So it's become a very significant Polish fintech business that has real traction and scale. As I said, this is a market that's still in the relatively early stages of transformation from offline to digital. Only about 15% of remittance happens digitally right now. And we think we're at a point in the S-curve where acceleration and adoption is starting to steepen. So for us and for our fellow digital disruptors, we're looking forward to accelerated growth and acquisition. The First World War in this sector was price. The Second World War is going to be speed. And so we spend lots of our time looking for partners who can deliver money faster. Over the next 3 years, we think with the market and with our own growth, we can grow our top line by about 3x and become a very meaningful player in this market. Not just operating in Europe, but by 3 years' time being a properly global business. We also have a nascent service for small businesses as well. The most important thing we're focused on over the next 3 years, though, is sustaining profitability. We found that since we became EBITDA profitable, our horizon for thinking and planning the future of the business has become a lot longer, and we've been able to make better decisions about where to invest and where to prioritize. But if you're not a profitable business, and most businesses, most fintechs who believe that they have a noble mission to fulfill, if you're not profitable as a fintech business, somebody who is profitable probably will end up fulfilling your mission for you. And so if you either invest in or found or run fintech businesses, I hope you'll give deep thought to the balance between profitability and growth. Thanks very much for listening.